Today on RoxomTV News, Elon Musk's business empire is facing one of its most turbulent weeks yet, with regulators circling and major deals reshaping his companies. The next potential Federal Reserve chair is promising to unwind trillions in stimulus, a move that could quietly reshape markets and borrowing costs. But first, a surprise U.S.-India trade deal is lifting stocks while raising big questions about what comes next. All that and more right now on today's show. Let's get into it. Happy Tuesday and welcome back to another edition here at RoxomTV News. I'm your host, Hank Hudson. So over the past few days, a surprise trade agreement between the United States and India has sent a clear signal through global markets that two of the world's largest democracies are trying to reset a relationship that has been strained by years of tariff disputes, political friction, and stalled negotiations. President Donald Trump announced that the deal would sharply reduce U.S. tariffs on Indian goods, cutting them from 50% to around 18% in exchange for India significantly increasing its purchases of American energy, defense equipment, and commercial aircraft. Trump framed the agreement as a major economic victory and said Indian purchases of U.S. goods could eventually exceed $500 billion, even though no clear timeline has yet been provided. Now, financial markets reacted immediately. India's benchmark Nifty 50 rose nearly 3%, the rupee strengthened by more than 1%, and export-oriented companies rallied on expectations of improved access to United States markets. Now, economists said the agreement could help India restore competitiveness against regional rivals such as Vietnam, Indonesia, and Bangladesh, which have been benefiting from relatively stable access to Western markets. Under the broad outlines disclosed so far, India has agreed to partially open its agricultural sector, lowering tariffs on imported cars and expanded purchases of U.S. oil, weapon systems, and aircraft. Indian officials confirmed the overall direction of the agreement, but acknowledged that the full legal text has not yet been released, which immediately raised questions about how and when the deal would actually be implemented. And that lack of detail has quickly become one of the defining features of this announcement. One of the most sensitive and politically complicated parts of the agreement involves energy. Now, in his announcement, President Trump emphasized India's commitment to reduce and eventually halt purchases of Russian oil, which surged after Western sanctions following Russia's invasion of Ukraine. And the move is being framed by Washington as part of a broader strategy to keep economic pressure on Moscow. Here is how the U.S. ambassador to India described that element of the deal. Let's take a look.
Ambassador Gore, is this premised on India buying Venezuelan and American oil as a way of, India stopping the import of Russian oil?
I don't want to get into too many details. I'll let the trade negotiators announce those specific details. The one thing I will say is both the Prime Minister and the President have supported bringing this conflict in Russia and Ukraine to an end. And so that's something that both sides have been in agreement on over a long time.
Indian refiners, however, say they have not yet received formal instructions to cut off those imports and are seeking a gradual transition period to unwind long-term contracts. Analysts warn that an abrupt shift away from discounted Russian crude could raise fuel costs, worsen inflation, and create political pressure inside India. Now, despite strong early optimism in markets, both governments have released few concrete details on enforcement mechanisms, dispute resolution, or implementation timelines. Neither Washington nor New Delhi has published a full text of the agreement just yet, and several politically sensitive sectors, including dairy and small-scale farming, remain unresolved. And in India, where millions of families depend on agriculture, those issues carry enormous political weight. Past trade agreements have often stalled in these same areas, which is why many analysts remain cautious. Now, ratings agencies have welcomed the general direction of the deal, but have urged investors not to assume smooth execution. Moody's said lower tariffs could help revive Indian exports after heavy losses in 2025, while warning that energy and agricultural uncertainty remains a key risk. Strategically, the agreement reflects a broader attempt to rebuild ties after years of disputes over digital taxes, market access, and industrial policy. Washington views India as a critical economic and geopolitical counterweight to China. New Delhi sees closer ties as insurance against future trade pressure. And from a market perspective, the announcement triggered what analysts describe as a classic relief rally, driven less by detailed analysis and more by a sense that the worst-case trade scenario had been avoided. Indian stocks and the rupee rose as investors reacted to the easing of tariff pressure, even though much of the agreement remains conceptual. The key signal is that this rally happened before full documentation was released, which tells you that markets are pricing political momentum rather than legal certainty. Export-oriented companies stand to benefit most in the near term because lower tariffs reduce margin pressure and demand risks tied to U.S. trade exposure. Investors are already rotating toward those very sectors, and the deal also improves India's position in China plus one supply chain strategies, where companies try to diversify production away from China. Now, multinationals care more about policy stability than perfect rules, and this agreement signals a potential reset. However, if details remain vague for too long, enthusiasm could fade. Energy remains a potential inflation channel, and if India moves too quickly away from discounted crude, import costs could rise and pressure the rupee. Now, on the U.S. side of things, increased energy exports and defense sales support shipping and manufacturing. Defense and aerospace firms benefit mainly through long-term order pipelines rather than immediate earnings. Agriculture remains the most politically fragile component, and if domestic opposition grows, it could become the first trigger for future disputes. Overall, the deal reduces downside risk more than it boosts growth forecasts. And equity markets celebrate first. Bond markets are still waiting for proof, and for American consumers, the most noticeable benefits are expected in clothing, textiles, jewelry, chemicals, and selected engineering goods, where India is a major supplier. Lower tariffs in those categories could gradually translate into cheaper retail prices, and roughly half of India's exports to the U.S. are expected to benefit under the new structure. For Indian consumers, U.S. electronics, laptops, machinery, farm equipment, and packaged food could become more affordable. Energy-related imports may also see price relief over time. Indian manufacturers benefit from cheaper access to industrial inputs such as plastic, polymers, and components, and that could eventually feed into lower prices for locally produced goods. However, major limits do remain. Steel, aluminum, automobiles, and auto parts remain under special tariff rules, and all agricultural protections also remain in place. So, in practice, this means gradual, selective relief rather than sweeping price cuts. And the timing of this agreement is also politically revealing. It comes just days after India finalized a trade deal with the European Union, and many analysts see Washington's move as a direct response to that. The White House moved quickly to reassert U.S. influence and avoid being sidelined in a major emerging market partnership. Trump framed the agreement as proof that America remains central to global trade negotiations. By acting quickly, Washington blunted Europe's diplomatic momentum. And the move reinforces Trump's preference for bilateral agreements, which are faster and easier to control politically than large multilateral frameworks. But at the same time, it signals competitive pressure on traditional allies. It sends a message that independent European moves will be matched, and economists caution that long-term economic effects remain uncertain. Politically, however, the objective has already been achieved. The United States has reinserted itself into India's trade strategy. Stepping back, the agreement reflects a mix of economics, geopolitics, and political signaling. It eases tariff pressure, it strengthens strategic ties, it counters European influence, and it keeps China in the background. The real test, though, will be the execution. Details, enforcement, and follow-through will determine whether this becomes a lasting reset or another partial compromise. Moving on to our next story of the morning, that's going on from Madrid to Barcelona and across all of Spain. This is unfolding at the highest levels of government, and it could reshape how teenagers use the internet. Spain's Prime Minister, Pedro Sanchez, says the country is done letting kids grow up in what he calls a digital Wild West. He is now pushing for one of Europe's strictest crackdowns on social media for minors. The plan would block anyone under 16 from signing up to major platforms. It would also force companies to install real age verification systems, not the click yes if you're 18 honor system. Now, speaking recently at a global summit in Dubai, Sanchez argued that kids are being left alone online with hate speech, pornography, and disinformation. Let's take a look.
That if we do not like social media platforms, we can simply leave them. That no one is forced to use X or TikTok. And they're right. For many of us, this is still an option. But we know that our children and many citizens do not have that choice. Social media has become an integral part of their lives, of their reality. So if we want to protect them, there's only one thing we can do: take back control. Spain will ban access to social media for minors under the age of 16. Platforms will be required to implement effective age verification systems, not just checkboxes, but real barriers that work. Today, our children are exposed to a space they were never meant to navigate alone. A space of addiction, abuse, pornography, manipulation, violence. We will no longer accept that. We will protect them from the digital Wild West.
Now, in those clips, you can hear Sanchez frame this as a child safety issue, not a culture war. Spain also wants to go further than just age limits. You see, the government is preparing legislation that could hold tech executives personally responsible for illegal or harmful content. That includes tougher rules for companies like Meta, TikTok, and even AI platforms linked to Elon Musk. Officials say algorithm manipulation and content amplification would be treated as serious legal violations. Now, Sanchez also is calling on other European countries to join what he calls a coalition of the digitally willing to coordinate enforcement. He argues that online platforms don't stop at borders, so regulation shouldn't either. If approved, this law could start moving through Spain's parliament as early as next week. And supporters say this is long overdue, pointing to rising teen anxiety, cyberbullying, and early exposure to explicit content. Critics warn it will be hard to enforce. They say teens may simply move to unregulated apps, foreign platforms, or VPNs. There is also concern about privacy, since stricter age checks usually mean more personal data being collected. Now, politically, this is a major bet for Spain's left-wing government. They are betting that voters will side with child protection over Silicon Valley convenience. And for families watching at home, this should matter to you because policies like this rarely stay local. If Spain's ban works, it could become a model for the rest of Europe and beyond. That means the rules shaping how kids grow up online in the next decade may be getting written right now, in real time, whether parents are ready for it or not. Our next story is playing out across global trading floors from New York to London to Asia, where precious metals markets are swinging at rare intensity. After one of the steepest sell-offs in decades, gold is suddenly roaring back. Prices are heading for their biggest daily gain since 2008 as investors rush into what they now see as bargain territory. After plunging for 2 straight sessions, gold jumped nearly 5% on Tuesday. Silver surged more than 8%. Now, the rebound followed a wave of forced selling that had pushed metals to 1-month lows. Spot gold climbed to around $48.96 an ounce after hitting $44.03 the day before. That is still below last week's record above $55.90. U.S. futures rose even more sharply. Silver, which suffered a record one-day collapse on Friday, rebounded to around $86 an ounce, and analysts say the market had become heavily oversold after panic selling tied to shifting interest rate expectations. Now, much of that volatility traces back to President Trump's nomination of Kevin Warsh as the next Fed chair. Traders expect Warsh to favor faster rate cuts while tightening control over the Fed's balance sheet. That combination strengthened the dollar and rattled metals markets. Analysts say many investors took profits after the announcement and are now returning at lower prices. Pressure also came from tighter trading rules. You see, the CME recently raised margin requirements on precious metals futures. That forced traders to post more cash and accelerated liquidations. Economic uncertainty has added to the swings, as January employment data has been delayed because of the government shutdown. Now, despite the turmoil, many analysts remain bullish. Strategists say gold has cleared key technical levels and could soon retest $5,000. Silver could push back toward $90 if momentum holds. Platinum and palladium also boosted strong gains. Now, after days of panic selling, investors are now betting the long-term bull market remains intact. And for those of you at home, this should matter to you because gold prices influence retirement funds, inflation hedges, and currency stability. It also reflects how sensitive markets remain to political and monetary signals. Volatility may continue, but for now, bargain hunters are back in charge. All right, joining us to chat about this story and others today, one of our good friends of the program, the CEO of Smash5, Brian Peck, everybody. Brian, welcome back to the show. How are you? Thanks for joining us this morning.
Hello, thanks for having me back. It's good to be on the show all the time, as every time.
Oh, it's great having you back, Brian. We're super happy you were able to join us this morning. And I want to talk about this most recent story about what we've seen in the market. Brian, when you watch gold fall that hard and then bounce back almost immediately, do you see that as a sign of strength in the market, or does it actually make gold feel more unstable to you? What is your read on what we've seen the last couple of days?
Well, I read the book, The Bitcoin Standard, in 2020. The book was established in 2018, and in the book, the author, Saifedean Ammous, talked about gold and silver will eventually become a tangible asset. Gold is relatively more intangible than silver in terms of the supply, and silver is more tangible than gold. And gold is intangible asset, but its supply will eventually grow as the price goes up. And after price goes up like sharply, like now, then everybody will be like coming to the market to produce more gold, and the supply will grow and the price will eventually plummet. And I thought that this is actually happening because the price of gold and silver have been increasing dramatically for the past 2 years, and gold 2x from its local bottom, and the silver price tripled for the last 1 year. It's like a it's like a parabolic increase, not a sustainable increase for the short duration of time. So I think people are figuring out that the future of gold and silver, the price will after all this drama of price increase, the price will eventually stop growing from this moment, from this level, and people will find out a way to produce more gold and silver eventually. I heard about Elon Musk acquiring a silver mining in Mexico to stabilize the supply and the price of silver in the US, and Samsung Electronics, of the large conglomerate in Korea, right? The semiconductor producer. It's looking into having this deal with India and other countries in Southeast Asia to find out new mines of silver and gold to stabilize the price of silver, especially silver in South Korea. So corporations, they will eventually find out the way, and there will be more silver produced from the earth eventually. Then I think now, the reason price of gold and silver going up is debasement trade, right? After Trump nominating Kevin Warsh, the interest in debasement trade is somewhat less than before, but people are still skeptical about Kevin Warsh doing anything like meaningful, even if he becomes the Fed chair. So I think that's why gold and silver price shut back up yesterday. And I think the trend of price of gold and silver going up is not finished yet. And people will keep being skeptical about the US and the power of dollar over time. And the more interest the global market will show more interest in gold and silver as the last resort of the safe haven. But the supply will grow eventually, and there will be an end to the price increase, and that's when Bitcoin will be found out by the market, and more people will get interested in the Bitcoin because it's a lot smaller than gold in terms of the size of the market cap, and it's just early in the market. So Bitcoin, there will be a price discovery moment for Bitcoin, and I don't think it's that too far away.
Yeah. No, I would agree with you. And I'm a little surprised that we're not seeing more momentum push into Bitcoin right now, because it kind of makes me think about the psychology behind people went into altcoins a little bit to begin with, right? Like we're seeing gold and silver move pretty handily right now, but Bitcoin's kind of hanging out in the back, right? So I'm surprised that people aren't looking for maybe slightly higher alpha plays, like because people got to that certain point with Bitcoin, especially when we saw it hit 6 digits, where they're like, it's so high now, is there really any upside for me? And I'm wondering, will we reach that kind of point of saturation with gold, with silver? We've seen such big gains from them both in the last year. Will people start eventually being like, hey, are there other options? Oh, there is. There's Bitcoin, and Bitcoin's not at 6 digits anymore. And will that maybe be part of the psychological element that contributes to the next leg up that we're expecting here this year? Now, I want to get back to the gold and silver though, Brian. So for people who might own a little gold or silver at home, they got it stuffed under their mattress, they got it in a retirement account, whatever. Do you think that they should look at the move that we've seen the last couple of days with gold and silver both drawing back as a potential opportunity? Or is it maybe a reminder that, even this stuff can swing wildly sometimes? It's not just Bitcoin. We saw 5 and 8% in the last 24 from gold and silver. So for investors out there, do you think this is an opportunity for them? Or is this maybe a harsh reminder that even the safe havens aren't necessarily safe from wild price swings?
Well, people have to remember the gold price after the dramatic price increase, usually it stops increasing or decreasing for a very long time, and then it goes back up on track. Silver, the price has been stalling for the past 15 years. Before 15 years, it's like $70 per ounce, and after 15 years, it has become the most famous asset all of a sudden. I think it can happen again. Silver already tripled from 1 year ago price, and gold has doubled from its local bottom, $2,500 per ounce, I guess. So, price can stall anytime from this level, and it can sustain at that same level for the very long time, like for 5 years or even 10 years. And no one knows what's going to happen during that long period of time. So gold rally can sustain. In my personal opinion, I think the gold rally can sustain more than 3 years from now, because as usually it's based on the history, and after gold rallies begins, then it usually sustain for about 5 to 10 years. 1980s were like that, and early 2000 was like that. And after the long gold rally, the stock market rally is coming back up on track, and gold, stalls during that period. It usually sustains for another 10 years. So, I think gold rally has begun after the Russia-Ukraine war began in 2023. So it's only been 3 years now, 4 years. So,
Yeah.
Logically thinking, gold rally can sustain another 3 years, and then it can end to it, and there will be another asset coming on top that can lead the whole market, and that can be stocks, U.S. stocks, or like Korean stocks, Japanese stocks. Anything can be the top asset leading the whole market. But Bitcoin has just been suppressed from people's mind, and no one's interested in Bitcoin anymore. And I believe gold and silver rally cannot sustain forever, and there will be time for Bitcoin.
Yeah.
Just because, there are so many features that Bitcoin have over gold and silver. I see so many posts on X that these days people having gold bullion bar or silver bullion bars want to sell their bullions in the local dealer shops, and the dealer shops are offering the price 20 to 30% discount from the spot price they can find out in the internet. It's crazy. Like,
Wow.
these,
That is.
yeah, there's no liquidity in the market because the price shot up too dramatically, too sharply. So local dealer shops see this price as a risk level. So they want to purchase whatever people bring into the local shop, the dealer shop, with a discount
Right.
price. And the discount is over 20%. So there is already a crack in the silver and gold market. So I don't think this rally can, sustain forever. And there will be time for Bitcoin.
Yeah, absolutely. And, you know, people are, different about evaluating risk right now. So I guess my question to you is, Brian, is like, what do you think is going to need to happen for us to see Bitcoin kind of resume its journey up and to the right? Are we looking for a little more geopolitical certainty? Like, for instance, if we got Ukraine and Russia to end the war today, do you think that's the type of catalyst we're waiting for before Bitcoin kind of makes its next jump up? It's just people need to feel a little more calm in the geopolitical mix, or what do you think is ultimately going to help Bitcoin establish its next move up and to the right?
That's actually a very good question. Um, I don't think the I don't think people's interest in gold and silver will end even if the geopolitical risk is dramatically decreased. I don't think people's
Sure.
interest in gold and silver will decrease even after Russia-Ukraine war ends and Trump administration somehow finds out the how to make a peace deal with every country that it's dealing with. Because
You're right.
the US-China tension, it's not like short-term conflict. It's like a very long-term turmoil that will end when either one crashes down. I don't know how to express this, but
Yeah.
I think the world economy is going into the wartime economy, like 1940s,
Mm-hmm.
like wartime. The US is
Yeah.
not fighting against China with battleships and shooting missiles, but it's already fighting a war in the back end. Cyber wars,
Yeah.
tariffs. These things are happening right now. And in the wartime, what usually happens is the two countries that are fighting each other, they're actively printing money because they want to raise money to pay for the expense. And what they are expending, what they are spending money to is, of course, building weapons. And
Right.
in a 21st century war, the most critical war, the machine and the weapon is AI. And both China
Yeah.
and US don't want to lose to their competitors. So, in order to develop AI engine, you need rare earths and you need critical minerals. And of course, silver is one of them. Copper
Mm-hmm.
is skyrocketing as well because of its importance in making, electronic devices. And gold, of course, is
Right.
of course very important asset, strategically, and also for the industrial usage. So Bitcoin is one of the,
Mm-hmm.
rare assets that you can find anywhere in the world, and it's very effective when you want to attack another country in a cyberspace. The hash rate is
Mm-hmm.
the means to um, project power. In a real world, of course,
Right.
shooting guns and then shooting missiles is power projection method. But in a cyberspace, you don't really do that, right? You either
Mm-mm.
um, let the opponent pay a lot of cost when they want to attack your website, and that's usually represented as a form of hash rate. How much energy you
Mm-hmm.
put into this, data, creating data or spending data, things like that. And Bitcoin is a
Mm-hmm.
very effective tool to put some energy, um, power projection to your opponent. So the
Right.
value of Bitcoin will be found out by these countries, especially in the US and China. It grow gradually over time, and its value position will be very important eventually in the world, all over the world.
Yeah. No, you make some good points, Brian. And it all seems like it's kind of heading in this direction where, like you mentioned, there isn't a physical war. The wars won't be fought necessarily on Mother Earth, but they'll be fought on the motherboards, right? Because we have everybody competing for AI and then the strategic resources needed to actually, use AI. And that's a big part, I think, of what's going on in Greenland right now is the United States trying to position itself for this kind of unspoken global war that we already seem to be in with China. So yeah, you make a lot of good points there. And I want to talk more more about something that's feeding into this war right now in our next story, as President Donald Trump's nominee for the next Fed chair has been announced, and it's Kevin Warsh, and he's making it clear that he believes the central bank's balance sheet has grown far beyond what is healthy for markets. And while that sounds like inside baseball economics, it has real consequences for anyone with a mortgage, a credit card, or a retirement account. You see, Warsh has been clear that he believes the Fed's balance sheet became bloated after years of crisis-era bond buying. Now, during the pandemic, the Federal Reserve bought trillions of dollars in government and mortgage bonds to stabilize the economy. Those purchases pushed the balance sheet to nearly $9 trillion in 2022. By late 2025, it had fallen to about $6.6 trillion before the Fed recently resumed limited buying to keep enough money flowing through the system. Warsh argues that shrinking those holdings could eventually help households and businesses by supporting lower interest rates. But market veterans say the reality is far more complicated. Today's financial system runs on massive amounts of central bank liquidity. Banks depend on that cash to operate smoothly. And analysts warn that when reserves fall too far, money markets can become unstable. Several strategists say once reserves approach $3 trillion, things start breaking, and that makes deep cuts risky. There is also a political tension here. Reducing the balance sheet, known as quantitative tightening, usually pushes borrowing costs higher, and that can clash with Trump's public push for lower interest rates. So a Fed chair promising both rate cuts and balance sheet reductions is walking a narrow path here. Some analysts believe Warsh may rely on smaller technical changes instead of dramatic sell-offs. That could include regulatory tweaks and closer coordination with the Treasury. Inside the Fed, major changes also require support from other policymakers. Many of them see the balance sheet as a permanent tool of modern monetary policy. And research firms expect Warsh to move slowly and avoid shocking markets. As one economist put it, the Fed turns like a slow-moving ship. And for viewers at home, this matters to you because these decisions influence how expensive it is to borrow, invest, and grow a business. If Warsh moves too fast, markets could wobble. If he moves too slowly, critics will say nothing has changed. Either way, the path to a smaller Fed balance sheet looks long, cautious, and politically complicated. We're bringing Brian back. Brian, when you hear that the Fed is still sitting on trillions of dollars years after the pandemic, does that feel like something that should worry people, or has that basically become the new normal now? What's your beat on this story?
Well, it's almost unbreakable truth that the US financial system will eventually break. And there's a saying in the Bitcoin community, Lean Alden says this a lot, nothing stops this train. So Kevin Warsh was nominated by Trump as the next Fed chair, but whatever he does, I don't really think it's going to work eventually. You know, he's not going to make any meaningful difference to the Fed and the financial system of the US. No, I'm pretty sure no Bitcoiners believe that Kevin Warsh is more important than Fed chair right now, Jerome Powell. But what I'm expecting from Kevin Warsh is his willingness to make Fed more reasonable type of organization. You know, Trump administration has sued Jerome Powell for spending so much money for the Fed building headquarter renovation. That's like not so that's not acceptable, right? Paying $2 billion to renovate a building, it's impossible. It's a funny story. Even I don't know anything about the building a building, but it sounds funny. So maybe Kevin Warsh is more reasonable guy than Jerome Powell, making Fed balance sheet at least a little bit smaller than right now. It's $9 trillion, but at least if he's trying to diminish the level of the size of balance sheet of Fed that the Fed's holding right now, then the global market will start trusting the US market more than now, and their interest in gold and silver could decrease a little bit. Then, and at the same time, if the economy of the US is booming up, like we saw from the PMI that's released yesterday, it's above expectation, right? It's above 52, I guess. So if there is strong belief, then strong belief that the U.S. economy is booming up again. Its manufacturing sector is coming back on track then. And the Fed balance sheet, at least Kevin Warsh, the new Fed chair, is trying to make it a reasonable size as possible. Then the U.S. will regain the trust from the rest of the world. And then, of course, it's exactly what Kevin Warsh said. If the economy is doing okay, then the stock market is going to follow the lead of the economy. And Bitcoin price will also follow the lead of the good economy and strong economy, growing economy, that's people expecting good future. Then we'll see a sustainable growth for both stock and Bitcoin market. That's what I expect from Kevin Warsh, nothing more.
Well, it's time for our top Bitcoin story of the hour. Bitcoin's currently sitting around $76,000 this morning. And today's story comes as President Trump is publicly throwing his support behind major Bitcoin and crypto market structure bill. Trump said he wants the bill completed quickly so he can sign it into law, and described himself as a big crypto person. Take a look.
Other than, I'm a big crypto person. I'm the one that probably helped crypto more than anybody because I believe in it. And the reason I believe in it is because if we don't do it, Scott, I think we can say then China's going to do it. Right?
Big crypto person has helped crypto more than anybody. I mean, this meeting was not symbolic. It took place as lawmakers moved from broad political debate into detailed rule writing and committee markups. Or in practical terms, Congress is no longer arguing about whether crypto should be regulated. They are now deciding exactly how it will be regulated, who will oversee it, and how those rules will be enforced. Now, the White House's involvement signals that the administration is working closely with lawmakers, regulators, and industry leaders before a final bill reaches the president's desk. The goal is to avoid last-minute confusion, regulatory turf wars, and policy breakdowns that have slowed previous efforts. Treasury Secretary Scott Bessent reinforced that message during the meeting. He framed the legislation as part of a broader strategy to position the United States as a global leader in digital assets and financial innovation. Now, the market structure bill is expected to clarify how digital assets are classified under law, and it would define which agencies oversee trading platforms, custody services, and market infrastructure. It would also establish clearer rules for how companies operate and protect customer assets. You see, for years, much of the industry has operated under enforcement by lawsuit, where firms often learn the rules only after being sued. That uncertainty discouraged long-term investments and pushed many companies overseas. Supporters argue clearer rules could bring capital and innovation back to the United States. Critics, however, worry regulation could still favor large institutions or limit smaller players. Now, for those of you watching at home, this matters because regulatory clarity affects where exchanges operate, how secure your assets are, and which platforms you can realistically use. If this bill becomes law, it could shape the U.S. crypto market for years to come and influence whether future growth happens here or abroad. We're bringing Brian back. Brian, when you hear the president openly saying he supports crypto and wants this bill passed, does this make you feel more confident about the future of the industry in the U.S.? What's your beat on this?
Yes, I believe that the market structure bill will eventually help Bitcoin community become more enthusiastic about the future of this technology, because there are some elements in the bill that help out the Bitcoin community specifically. It's encouraging the self-custody of Bitcoin by the law, and also it has this clause that the open source developer cannot be sued by the authority.
Right.
And that's very helpful for open source coders and developers all around the world can more easily access Bitcoin and build something usable and valuable on top of Bitcoin network. It's of course helpful for the growth of Bitcoin network. Other than that, I'm not really interested anymore because it's just a power game between two industry, the banking industry. So the major topic that's halting the bill to pass the Senate is the stablecoin yield, of course. The crypto
Right.
industry is urging the Senate to pass the bill with the stablecoin yield available, and the banking industry is, fighting against such change to the bill. The current form of the
Yeah.
bill doesn't really include in the stablecoin yield right now. There is
Mm-hmm.
a similar case in Korea. There was a similar case in Korea back in 2020, I guess. Um, there was a new platform called Tada, which is similar
Mm-hmm.
ride-hailing service to Uber. Um,
Mm-hmm.
After Tada was established, the union of taxi drivers like rioting against the new platform called Tada because the Tada was taken a roundabout way, and
Mm-hmm.
because there was no law that's allowing this new ride-hailing business available in Korea. So Tada was
Mm-hmm.
a threat to the taxi drivers, and the union was very strong. So it rioted very harshly. So the government actually put a hand to the union and it banned the ride-hailing
Mm-hmm.
service in Korea. And it's a very good example that such legislation, such, the government decision can always tamper down the innovation, the new technology. So it's kind
Right.
of same thing happening in the crypto space right now. The banking industry don't want the stablecoin yields to be available in crypto exchanges like Coinbase because when Coinbase gives out 3.5% yield on stablecoin deposit, then everyone will take out their deposit from the local banks, community banks, and store their deposits into this Coinbase exchange. The
Right.
current yield, deposit yields on community bank is below 1%. Some banks even
Yeah.
offer 0.1% yield. So it's not a, competition anymore. It's more like a bank don't want to lose their authority, their rights for their business part, and Coinbase is just a threat to, take over whatever they have. And Coinbase, of course, is of course, I think they have to back down a little bit, but they are not because stablecoin is just everything they have right now. They have USDC, and when people can start depositing USDC into Coinbase, then they can give out the stablecoin yields. Their dream of becoming an everything exchange and become the monopoly of the crypto world will, eventually become possible. So I don't really
Mm-hmm.
support Coinbase in this case as well. Of course, they are
Mm-hmm.
not, it's not an innovation, Giving out stable coin yields is not
Right.
an innovation. Ride-hailing service is, very useful to the normal, to the general public. It's more
Mm-hmm.
usable, it's cheaper and, there's a lot easier access for people to, call the taxis when there's nothing like that, when there was nothing like that in
Mm-hmm.
Korea. But stablecoin yields is
Yeah.
nothing more than just giving out yields. The hedge funds and crypto traders pay out to the exchange. The usage of stablecoin is what? They, the traders, usually hedge funds and small trading groups, they borrow stablecoin
Mm-hmm.
from these exchanges and they want to use it to leverage their trading. They want to trade Bitcoin
Right.
and altcoins and they want more assets, more leverage. Other than that, there's not much usage because stablecoin is not used in the daily, payment yet.
Right.
Um, so giving out stablecoins yields is too early, I guess, and Coinbase can
Mm-hmm.
back down a little bit, maybe let the bill pass without the stablecoin yields availability, and then we can,
Mm-hmm.
come back to discuss the issue again later on. But I don't know why Brian Armstrong from Coinbase so against the bill to pass in that form, and I don't really support that as well.
Yeah, I mean, it would fundamentally change the banking system. I mean, no more free lunch for all the banks out there just taking our money, lending it out for percentage points and us getting scrapped. So it is a big deal. And, moving on to the broader legislation, from your perspective, Brian, as someone building in Bitcoin and financial products, which part of this legislation matters most for attracting serious capital and long-term adoption going forward? What are your thoughts on that?
So I'm an entrepreneur, right? So I see the US market as the most important market as a Bitcoin service provider. So when I researched which type of crypto license I can acquire from the US, the answer is every state has its own crypto license. And it's very time consuming and expensive to acquire all these licenses from all the states. So the market structure bill and any type of crypto related bills can help resolve this issue. Having one or two crypto licenses that can, apply to all states is awesome. Anyone can come into the US market and establish a company and acquire the crypto license and, provide their service to the 300 million US citizens.
Yeah.
It's an awesome story, right? So
Yeah.
I think the most important aspect of the crypto structure bill is narrowing down the point of contact and, the access to the market, increase the access to the market for the overseas entrepreneurs like us. And of course, I think I'm expecting this from the new Fed chair, Kevin Warsh, as well, but I don't know if it's going to happen or not. But anyways, right now there is a still, shadow restriction for Bitcoin in the banking industry. Michael Saylor has created this new type of investment instrument called digital credit. He views Bitcoin as digital capital, and he creates digital credit on top of that. And he expects the banks to invest in his digital credit and actually makes a bank deposit that gives yields about 8% a year. So digital credit gives 10% yields to the bank, and bank gets that deposit, bank gets that 10% yields from the digital credit and gives out 8% yield to the its customers. Then it's very competitive financial instruments because the bank deposit yield is like 1% or 2% a year. So when this thing can happen, to make this thing happen, actually, the banks have to accept Bitcoin as a digital capital. They can store Bitcoin as a deposit, and they can store it as a collateral, and they can, make this new financial products on top of Bitcoin. But there's a shadow restriction in the banking industry, and I'm sure the Fed is restricting all the local banks in the US to do so. And I'm expecting the new Fed chair can release this a little bit, loosen this a little bit more, and eventually banks can accept Bitcoin as collateral and roll out this new financial products for higher yields, which is very, very good for US consumers.
Yeah, no, I think there's a lot of good things underway, and I will be curious as to how this legislation is finalized, but I guess you and I both will just have to wait and see. But I do want to thank you so much for joining us on the show today, Brian. It's always an absolute blast to have you on here, so thank you for sharing your insights and expertise with us. And I'm sure you've gained at least a couple of new fans yourself this morning. So for those in our audience that said, I need more Brian, what's the best place I can send them to see what you're up to with the team at SmashFi, or maybe what you're up to on your X/Twitter account? Where can they find you?
Yeah, you can find me on X most easily. It's Brian Hunjong after handle. And I'm also on LinkedIn, which is under the same name as well, Brian Hunjong. Everyone, welcomes to see my post and push the like button.
I love it. I love it. Well, we love having you on the show, Brian. Thank you so much for joining us. I know it's very late over where you are, so get some rest, and we'll be excited to have you back on more in 2026. So thanks for stopping in, and enjoy the rest of your week, my friend. Great having you as always.
Thank you. Have a great day.
You as well. Thanks, Brian. All right, we're taking a quick break here at Roxom TV News. When we come back, we got the second half of this morning's program, which will include a shutdown showdown on Capitol Hill, and the Clintons are pulled into the growing Epstein probe. All of that and more coming your way when we're back right after this quick break. And effortlessly growing your Bitcoin portfolio? I sure am. And the Bitcoin credit card by Gemini earns you Bitcoin back on every purchase. You can use it like any credit card. Buy lunch, gas, or your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. All that with no annual fee. And right now, you can grab a $200 Bitcoin welcome bonus. It's the easiest way to start building your Bitcoin stack. Just go to Gemini.com to learn more. The top story of our second hour is unfolding in Washington, D.C., where Congress is racing to end a partial government shutdown, but a Trump-backed funding deal is hanging by a thread in the House. Lawmakers are expected to vote on a bill that would fund most government agencies through October and temporarily extend money for the Department of Homeland Security. If it passes, it would head straight to President Donald Trump's desk. But with Republicans holding only a 4-seat majority, party leaders can afford almost no defections. The package already passed the Senate with bipartisan support. In the House, however, it is running into resistance from both sides. Democrats say they cannot support the deal without limits on what they describe as an aggressive immigration enforcement. Now, that criticism intensified after 2 U.S. citizens were killed by federal agents in Minneapolis last month. At the same time, conservative Republicans are threatening to block the bill unless it includes strict voter ID and citizenship rules. House Speaker Mike Johnson says those demands do not belong in a spending bill. Trump has urged lawmakers not to change the deal, warning that reopening negotiations could extend the shutdown. The tension has grown sharper because of a parallel legal fight over one of the Minneapolis shootings. You see, a federal judge recently lifted an order blocking the Department of Homeland Security from destroying evidence. However, the judge also criticized officials for defending the agents and labeling the victim as a terrorist before investigations were even complete. Homeland Security Secretary Kristi Noem has now pledged to deploy body cameras for DHS officers starting in Minneapolis. Video evidence shows the victim, ICU nurse Alex Preddy, was holding only a cell phone before being shot. The Justice Department has opened a civil rights investigation, and state prosecutors are still seeking full access to federal evidence. The case has become a rallying point for Democrats demanding more oversight. Now, if the funding bill fails, the shutdown that began Saturday will continue. That would mean furloughs, service disruptions, and economic damage. The last major shutdown cost roughly $11 billion. And for those of you at home, this should matter to you because these standoffs affect everything from airport security to loan processing to small business contracts. And with pressure mounting, House leaders are betting enough lawmakers will blink first. Whether that gamble works could come down to a single vote. Moving on to our next story, former President Bill Clinton and former Secretary of State Hillary Clinton have now agreed to testify before Congress in the expanding investigation into Jeffrey Epstein. That decision comes only after lawmakers threatened to hold them in contempt of court, which means this is no longer about politely declining interviews. It's about avoiding legal consequences. And it signals that this investigation is moving into a much more serious phase. The Republican-led House Oversight Committee had accused both Clintons of refusing to cooperate. Lawmakers warn that continued resistance could trigger contempt votes and possible criminal exposure. Their aides now say the couple will appear in person after previously arguing the probe was partisan and politically motivated. Now, at the center of this investigation is Epstein's long history of connections to politicians, business leaders, and elite institutions. Epstein died in jail back in 2019 while facing federal sex trafficking charges, but his network has continued to resurface. Bill Clinton has acknowledged flying on Epstein's private plane several times in the early 2000s. He said he had no knowledge of Epstein's crimes and has publicly said he regrets the association. Committee Chairman James Comer says lawmakers are still waiting for firm dates and clear conditions for the testimony. And this investigation gained new momentum after the Justice Department released millions of internal documents detailing Epstein's contacts before and after his 2008 conviction. Meanwhile, across the Atlantic, the same document release has triggered political turmoil in Britain. Former Labour power broker and ex-U.S. ambassador Peter Mandelson is now under investigation himself. You see, files suggest he shared a confidential economic briefing with Epstein and received tens of thousands of dollars in donations. Mandelson has resigned from the Labour Party, denies any wrongdoing, and says he does not recall receiving the payments. British police are now reviewing whether his actions could amount to misconduct in public office. Prime Minister Keir Starmer has called for Mandelson's removal from the House of Lords and ordered a review of his contacts with Epstein. Now, the documents show that Mandelson forwarded a memo discussing asset sales and debt reduction, raising questions about whether sensitive information was improperly shared. Taken together, the Clintons' testimony and Mandelson's scrutiny show how Epstein's network continues to ripple through political systems years later. And for those of you watching at home, this should matter to you, because these investigations are no longer abstract or historical. They are forcing powerful figures to explain past relationships in public, under oath, and under sustained scrutiny. And as more documents surface, this story appears far from finished. We're taking a quick break here at Roxom TV News, but when we're back, we're going to be talking about the bold bet from Elon Musk, and in just a bit, we're going to be joined by not one, but two special guests here on the show to break it all down. So stay tuned, more Roxom TV News coming at you right after this quick break. Welcome back to Roxom TV News. Now, over the past week, Elon Musk has found himself at the center of an unusually intense cluster of headlines, ranging from regulatory raids in Europe to a historic corporate merger to renewed questions about past personal associations. Now, taken together, these developments suggest that Musk's business empire is entering a new phase, one where governments, investors, and the public are watching more closely than ever. Let's walk through what has been happening, how it connects, and why this matters. You see, on Tuesday, French authorities launched a criminal investigation into Musk's social media platform, X. Police raided the company's Paris offices as part of a probe into alleged data abuse and foreign interference risks. Officials are examining whether user data and recommendation algorithms were improperly used during recent political campaigns. At nearly the same time, Britain's privacy watchdog opened a formal investigation into XAI and its chatbot Grok. The UK regulator is reviewing whether Grok's integration with X complies with data protection laws. Together, these actions reflect growing frustration among European regulators with Musk's approach to compliance and oversight. Less than 24 hours later, Musk announced a major restructuring of his empire. His aerospace company, SpaceX, revealed that it had acquired XAI in a deal valuing the combined company at roughly $1.25 trillion. It is the largest corporate merger ever recorded. Here is Musk discussing that very deal.
There were a lot of SpaceX investors that were not in favor of this combination because of the debt component on XAI. So that debt's going to get factored into this, right? And they'll have to do some interesting financial mechanics, just like they did when X, the social platform, and XAI combined into a single entity as well.
Yeah, and I'm wondering why it's important to these companies, to Elon Musk, to have this merger happen before SpaceX potentially goes public later this year. Because you think about SpaceX, obviously it has a viable product. It has a very impressive valuation. You think about potentially building data centers in space, that I could see that, but it just feels much further off and maybe not as relevant to this specific public offering.
Just to build a little bit on what Ryan was talking about, it's literally about inference, running AI models. And, you know, the point of having data centers, which are literally satellite form factor in space. SpaceX builds them, has the capital to buy the GPUs, which it intends to raise from the IPO. And xAI makes use of that compute capacity because it is energy efficient and there is minimal latency in getting the results of running that model back down to Earth. That is the rationale.
So that was analysts discussing the current Musk deal. And the merger folds artificial intelligence, satellites, social media, and computing infrastructure into a single platform. Analysts say it strengthens SpaceX's future IPO pitch. But it also concentrates enormous power in one privately controlled network. That concentration is now drawing scrutiny. You see, from a market perspective, these investigations and mergers are already changing how investors view Musk's companies. Analysts say regulatory risk is rising across what they call the Musk complex. A police raid in Paris and a UK privacy probe increase the chances of fines, restrictions, or forced product changes. And that uncertainty makes future earnings harder to predict. And when that happens, investors demand a bigger risk premium. Or in practical terms, that means more cautious valuations. Data use is one of the biggest financial pressure points, and if regulators limit how user data can be used to train AI systems, it could slow Grok's development and reduce monetization. That affects the entire strategy Musk is building around xAI, and SpaceX. The merger itself cuts both ways. It can be sold as a powerful synergy story, but it also concentrates risk into one giant platform. Any enforcement action now hits everything at once, and that matters for a future IPO. Greater scrutiny widens the valuation range and increases volatility. Investors may demand more disclosure, stronger governance, or a larger pricing discount. Another effect is counterparty caution. You see, advertisers, enterprise customers, and government partners become more conservative, and then deals slow down. Contracts become more restrictive, and legal costs tend to rise. Tesla, meanwhile, tends to move mainly on the Musk headline risk, even when the news is not directly related to its operations. All right, joining us today on the show to talk about this story and others, I want to welcome back two friends of the program, Cedric Jungelman from the Bitcoin Matrix podcast and Mike Jarmusch, founder of the Lightning Ventures. Gentlemen, thanks again for joining me on the show today. Great to have you back. How are you?
I'm great. It's nice to see you guys.
Great.
Yeah,
Thanks for
great to
having
see
me
you too,
again,
Cedric.
Hank.
Yeah, great to see you, Mike. I'm glad to have you both on at the same time for a little menage here. So I want to get into this most recent story with Elon. And I'm going to start with you, Cedric. When you see regulators circling like this and investors are starting to get a little nervous, do you think this actually hurts Elon's companies long term, or do you think he always finds a way to turn this into some kind of fuel? What's your beat on this story?
Well, I think Elon is a master at raising money and getting investors excited about his project. So I don't see this being a hindrance to him long term at all. I think this is very much a part of his long term vision. And I think this is probably a very smart move for him in terms of the way he's running these enterprises.
Yeah, it always seems like Elon's playing some game of 4D chess out there. And Mike, if you were a regular investor watching all of this play out, would this make you more cautious about anything connected to Elon, or does it not change how you look at his companies at all? What's your thoughts on this?
I mean, Elon has the Midas touch and has for a while. I mean, everything he's done has been great. And just as a retail, angel investor, you catch a wave when you start investing in angel investing. And I actually had all these deals sent to me before it was xAI, when it was Grok, when he was acquiring Twitter. And I had thought at that point in time, 2,000 angel investments is enough. Why don't you back off? And I actually missed them, and I never had so much remorse about missing these deals. But the Musk verse is out of control. I mean, this is $1.25 trillion. This will be one of the largest IPOs in history. That's larger than many countries' GDPs. And together, the Musk verse is crazy. When you put all this together, he's kind of unstoppable.
Yeah, he really has his hands in a lot of pies right now, which brings us to the next part of the story, and I'm going to be back with you guys in a second, because the most serious internal risk right now amongst all of his companies might actually be Grok itself. You see, investigations by the Washington Post and Reuters found that XAI loosened content safeguards to boost engagement. Engineers were under pressure to make Grok more provocative and more addictive than rival chatbots. Internal priorities shifted toward keeping users talking longer and generating more content. Several current and former employees say safety filters were deliberately relaxed, especially around sexual material. That reflected Musk's public criticism of what he calls AI censorship. Features allowing rapid image manipulation were rolled out with limited review. Safeguards were often added after problems appeared, not before. And some staff say raising safety concerns could hurt their careers. As a result, Grok continues to generate non-consensual sexualized images in many tests. Rival systems from OpenAI, Google, and Meta refused similar requests, and legal experts say this could expose XAI to major fines and liability under European and British law. In many ways, critics argue this controversy was predictable. It reflects a strategy that prioritized speed and virality over risk management. We're bringing the guys back. Cedric, do you think that pushing AI to be more edgy and viral is worth the trouble it's causing now, or was this always going to backfire? What's your thought on this?
Oh, I think this is a differentiator for Elon in the AI race, which I think is much more about building their, sort of being able to acquire debt and equity to deploy and acquire CapEx. So they have to make this sound way bigger and sexier than it is. And engaging with the X community is probably the best way to market his technology here to investors and get the crowd excited. So I think it's been a good gamble.
Yeah, absolutely. Yeah, he is a showman, if nothing else. We've seen it from Elon before. He had the chainsaws with Melee and whatever else. He's a showman. And Mike, this one's for you. When you hear that employees felt pressured to ignore safety issues, does that worry you about how these companies are being run and all? Or do you think this is just growing pains at a tech company, par for the course? What's your beat on this?
I think it's growing pains, but I think just what Cedric said, it's an important differentiator. I mean, do you want a nanny controlled AI, or do you want the ability to use it? And by the way, can it even be stopped? I mean, is it something that can really be controlled in the future? I mean, it's going to go that way anyway, at least likely it will. So I think that, him having this sort of unfiltered, unbiased sort of LLMs that he's had since the very beginning, I think it's a great differentiator. It's one of the reasons why I love it personally.
Yeah, true. I mean, I use the Grok image generation for most of the stuff I do because of this very differentiator, like you guys said. So, you can get all upset about how people are using it, but at the end of the day, it's those people deciding to use it that way. So maybe I'm in favor of cutting off the safeguards on that, but that's me. But this is affecting things outside of just image generation. And I want to get to that partner story right now, because at the same time, XAI is expanding into financial markets. The company is recruiting crypto specialists to help train models on digital asset trading and blockchain activity. These experts are not managing money. They are teaching AI systems how to professional investors analyze markets. That includes derivatives, on-chain flows, and risk management. And the goal here is to move beyond simple price prediction towards sophisticated financial reasoning. By combining social data from X with expert training, Musk is trying to build an integrated crypto intelligence platform. This reflects how central financial applications are becoming to his AI ambitions. And it also positions Grok as a tool for institutional users, not just consumers. Bringing the guys back. Cedric, do you think training AI to understand crypto markets is actually useful for everyday investors? Or is this mostly about helping big institutions get even more of an edge? What's your read on this?
I'm wondering how much this is cover for chain analysis and understanding what's happening on all these blockchains for the sake of, for the purpose of financial surveillance down the road. I mean, I really do think Elon Musk is building the everything platform. All the companies revolve around X in the title. Eventually, everything around that will fall away. It'll just be X. And with SpaceX, it's really, I think, more about satellites and telecommunications than just the pure rocket play. And it seems that it's cheaper to run these calculations and data storage, data power in space. So you're going to feed the AI. And on the X platform, you're going to use some sort of unit of exchange, whether that's the dollar or an X unit or X coin. And it'll be everything from making your dentist appointment to, but all of it will be sort of vertically surveilled. And all of this is a public-private partnership with the state. I mean, a lot of, I think, the profits from or cash flow for these businesses come from state contracts. So,
right. Yeah, no, you make some really good points there, Cedric. And another thing that I'd be curious about, and I would love to ask you about this, Mike, is would you personally trust an AI like Grok to help you through trading someday, or are you still in the no way I'm letting the AI do this for me camp? Like, what is your beat on and what's going on with there right now? If I'm analyzing the market so that AI can do all of this stuff for you, are you a believer in that, or is that you're still kind of staying hands off from that at this juncture?
I'm in the camp of let AI help you do everything, from put up the wallpaper to identifying trends and stocks and equities and things. And I definitely played around with that to identify certain stocks, not TA, but just with a new administration coming in, what's likely to do well under RFK, under the Make America Healthy Again, or different trends like psychedelic drugs and these sort of things. And, Grok specifically, or whatever it's called, XAI, has been great with really identifying the beat of what's going on. And I think that it's the future. I mean, it's not perfect. Anyone saying, let AI pick all your stocks is kind of silly, but it's clear that the merger is not just about space and AI. He's building a tech empire to tackle everything in between, like Cedric said, with your dentist appointment to traditional finance. And it's just such a darn shame that Musk is not a diehard Bitcoiner.
I know. Well, he's talked about
that
it
would
before,
make this
and
so
maybe
much
he'll warm
better.
up to it again. It would. I'm ready for my everything app to only accept Bitcoin. I think we're all here for that. But I want to get more into SpaceX in this next part of the story, guys, and we're going to chat about it in a second, because with SpaceX targeting a possible IPO around 2026 at a valuation near $1.5 trillion, interest is rising among retail investors, but access remains limited. You see, that's because SpaceX is private and ordinary investors cannot buy shares on an exchange. The most direct route is through private secondary sales. These are typically arranged by wealth managers, and minimum investments often reach 6 or 7 figures. Now, for most people, that's out of reach. Indirect exposure is more realistic. Some mutual funds and interval funds hold SpaceX stakes, including funds run by Barron Capital and Fidelity. These funds charge high fees and have high limited liquidity, and some ETFs offer partial exposure through special purpose vehicles. But SpaceX is usually a small part of those portfolios. For now, most retail investors are going to have to wait. Bringing the boys back. This time I'm going to you first, Mike. Mike, if SpaceX does go public in a few years, is that something you'd actually be excited to own, or would you rather stick to Bitcoin and crypto? What are your thoughts on SpaceX and space travel as an investment in the future?
This is something I know quite a bit about. And over the years, I've had so many opportunities to pick up SpaceX shares on the secondaries, so many. And it just seemed like a high valuation at the time. You don't know. I mean, one of them that I remember specifically, it was like $60 billion. A $60 billion valuation, the minimum investment was 10K. That anyone could have, not anyone, but if you were signed up and your deal flow was right, you could have invested in that. And I just thought $60 billion, I thought it was too much. And, look at this. So I definitely think that with the tokenization, I mean, that word, it is what it is. But I think with the tokenization of a lot of these private pre-IPO equities, you're going to start getting a lot more and more of retail access, being able to participate easier and easier. But I would definitely be very interested. I don't really like to buy IPOs. I like to buy before they go public, or, maybe wait till that IPO retraces quite a bit. I mean, look at Circle now, right? It was $300 and now it's 50 something. So, maybe wait for the dip. I don't buy IPOs just as a personal rule, but, man, it's going to get easier and easier for retail to participate.
Yeah, but right now, as we mentioned, this is something you can only buy in the secondary market. And Cedric, does that bother you that regular people basically can't buy SpaceX yet while big funds get early access, or is that just kind of how the game works?
Well, it is how the game works now. It bothers me to some extent. It's why I came to Bitcoin as an asset class in one way. There's no sort of gates keeping you out. You could buy in small denominations as small as $1 or even less. So, but I think that there is concern around maybe predatory finance. And so I don't know what the exact answer is there, but I would like to see more democratization of the ability for people to invest in whatever they want. If they want to put 10,000 into their Robinhood account, why can't they put 10,000 into their AngelList account and put that into private equity? That should really come down to their own decision making, and I think people should take personal responsibility and accountability. So I would like to see those, I guess, gates removed, I guess is my answer.
Yeah. How do you feel about the SpaceX XAI? Does that seem like something you'd be interested in investing in, or is there anything about that gives you a little bit of caution?
I definitely think that over the longer term, even if we're in like a .com moment, that the value around AI and satellites is going to be tremendous. I don't know which company to bet on. I do think that the valuation though, of 1.25 trillion to me actually sounds low. Very similar to Mike. I would never buy an IPO, but I wouldn't be surprised to see this come out in the 2 to 3 trillion range when it is actually IPO'd sometime this year or next year. But at the same time, I don't see why Musk would be in a rush to IPO this now combined vertical entity, especially with the state contracts. And it doesn't seem like they're raising a lot of cash, or it was like 50 billion on the 1.25 trillion. That seemed low as well to me. So we'll see. It does seem like a low valuation for this stack, though, this tech stack.
Yeah, at this point, hard to bet against Elon. The guy just does it again and again, and the ripples of what he does goes throughout the market. And that brings us to the next part of this story, because China has announced that it will ban hidden electronic door handles starting in 2027. Now, all vehicles will need visible mechanical handles that work even if electronics fail. And the rule follows safety concerns after accidents where rescuers could not open the doors. Tesla popularized the design, many Chinese automakers copied it, and analysts say manufacturers will now need to redesign vehicles for China. That could raise costs and slow new model launches. It also reflects a tighter scrutiny of design choices that prioritize aesthetics over safety. Bringing the guys back. Cedric, when you hear China forcing design changes like this, does that sound like reasonable safety regulation to you, or more like governments just kind of flexing their power on those door handles? What do you make of this at first sight?
Definitely sounds like governments flexing their power. What studies did they run? Who are the experts on these matters? Why are they getting involved? If there were, I think, bad consequences from these kinds of designs, I think it would lead to civil or sort of suits through private matters that would bubble up, and then the manufacturers would stop making these kinds of designs. So I think it would be great if the state stayed out of the free markets or markets.
Yeah, I would concur with you on that one. Because like Mike, I would wonder from your perspective, do rules like this, are they just slowing down innovation, or are they actually making products better in the long run? Where do you fall on that?
Well, it definitely doesn't slow down innovation, but I have to say, this is, in my opinion, this is the dumbest thing ever. I mean, this is so stupid. I mean, no, really, isn't it easier to actually educate the first responders and the people? Can't you just have like a 1-hour course of like, hey, this is how you open the door to a Tesla and any future automaker who decides to go this route, right? Isn't that easier than making them make different cars? I mean, this is just the stupidest thing. I'm a proud new Tesla owner. I bought my first Tesla this year, 2026 Model Y, and I have become one of those people, those people who are obsessed with Tesla, and you're like, oh man, that guy really loves his car. I thought I was never going to be that guy. I am that guy. It is the coolest thing ever. And to make them remake the cars because someone can't open the door is just the dumbest thing ever. It's such government oversight. It's absolutely absurd. I mean, educate the people that are going out there and saving lives, and just, I can't believe this. I mean, it's just so silly.
I got a million questions about the Tesla, Mike.
We got time for one. What do you got, Cedric?
Okay, fine. We'll start with, are you worried in a power outage? How are you going to charge the car in a hurricane?
I mean, you'd have bigger problems, I think, in the hurricane. You know what I mean? In a hurricane, I'm in the house. You know, I'm not driving anywhere. You know,
Are you concerned about sitting on a lithium battery?
good question. You can buy these sort of EMF testers and check them in the car, and I'm not worried with the levels and the research that I did, but I did look all into that, so I'm with you on that.
What about the fire hazard if the battery just erupts?
I mean,
or has it ever happened?
I had a Kia Soul that caught on fire one time while I was driving it. So I mean that risk probably is there with any car. But no, it's probably the safest darn car I've ever had, especially when it's driving for you. I have to say it's a better driver than you are, Cedric, believe it or not.
Wait, Mike, are you sponsored by Tesla or something? But you do sound like every Tesla owner. They always say it's the best thing. Elon said he wants it to be the most fun thing people own. So I don't think you're alone in that assessment of your Tesla. Congrats, by the way. That's exciting. All right, guys, we're going to move on to our Bitcoin story of the morning. So, guys, let's roll the stinger and get into it. It's time for our Bitcoin story of the hour. Currently, Bitcoin's sitting at around 75, 76K, and President Trump is publicly endorsing a major Bitcoin and crypto market structure bill following a closed-door White House meeting. You see, Trump said he wants the bill finished quickly so he can sign it into law, and emphasized his belief in crypto's long-term future in the United States. The bill is expected to clarify how digital assets are classified, which agencies regulate them, and how companies must protect customer funds after years of enforcement by lawsuit that pushed investment overseas. Supporters see the legislation as a way to bring capital and innovation back to the United States, while critics warn it could still favor large institutions. Now, if passed, the bill could shape how Americans buy, store, and use Bitcoin for years to come. I'm bringing the guys back. Mike, when you hear that the White House is now talking about how actually finishing crypto rules instead of endlessly debating them, does that feel like a real turning point to you, or have we heard versions of this story before? How are you feeling about this info right now?
Well, we've definitely been waiting, and with every step of the way, there was the Not So Clarity Act that passed earlier, or I'm sorry, no, the Genius Act, right? I think Congress does that. I think they name the bill in the opposite of what they have. They say it's like this bill, but it really does the other thing. Okay, so this is the Genius bill, or was the Genius bill. But I mean, look, I personally don't understand why the CFTC and the Senate Agriculture Committee, the same people that are working on Bitcoin, that are going to oversee Bitcoin and crypto, are the people that are looking after tractors and tomatoes and things of that nature. It makes perfect sense, right? While they should actually handle Bitcoin, crypto, and the future of digital finance and all this stuff. I mean, it makes perfect sense to me. I mean, we've all been waiting. All of these companies like Coinbase and Abra and all that, I don't do any of the stable coin rewards or the yield, but I guess that their whole workaround was, okay, we're not paying them the money, but we'll pay them in a different way. We'll just call it rewards. And then people are still getting paid. Right. So I don't understand what the big hang up is on the semantics of just being able to pay them directly, because you can get paid right now. So that's kind of what, kind of killed it. I think it was January 15th they were supposed to do this. But it would be great to get this done. It'd be great to legitimize all of this and just kind of solidify the tax reporting and everything else at the end of the year. I can't wait till it's done. But right now, we're all just kind of sitting around. And maybe that's reflected in the price. I mean, it's shocking that the price is what it is. But I hope that they do get something passed.
Yeah, absolutely. I think we're all really eager for some kind of clarity here. And Cedric, for everyday Bitcoiners and crypto users out there, do you think this kind of legislation is more likely to make things safer and easier, or more complicated and restrictive? What are the vibes you're getting as we wait to get some official info on this market structure bill?
I mean, usually these things lead to things being more complicated and restrictive for the consumer. Sort of what Mike was talking about, how it's the opposite effect. What exactly are we waiting for? Is it clarity, I think, on the regulatory agency and committees that will oversee Bitcoin? So I don't see how that's really going to benefit. I mean, maybe we want the right oversight, but I don't see a lot changing for the end user. And then I think there's this battle over yield or returns or rewards, and it's already happening, and it'll happen, I think, on both sides going forward. But I guess they're looking for clarity whether it's really going to be the banks and the old institutions and that's going to be able to provide the yield versus the new sort of crypto economy built around stablecoins. Is that the big divide here? But I think there'll be yield either way. So not a lot changes for the end user, just really who gets to provide the yield. So I'm kind of enjoying this not happening and them getting nothing done. I like when the government can't get much done. So, the narrative hasn't been good for Bitcoin. The price is down, but maybe that's the blessing in disguise. It's not fun to be 50, 30, 40% off all-time highs, but this is maybe a generational opportunity in the long term. So to buy Bitcoin and stack sats. Not financial advice, but
Right. Yeah, because as you guys have both mentioned, it seems like the price right now is feeling very suppressed given all of the great signals we've gotten over the last year, government regulation, obviously institutions buying in. So it doesn't feel like the price is reflecting where we're currently at. And Mike, this is for you. Trump has been framing this as a way to keep innovation in the United States, but critics worry it could favor big institutions. So do you think this ends up helping regular users and builders, or is this mostly just helping the biggest players out there? Where you land on this?
Well, I think it kind of is uniform that it helps everyone. I mean, at least just having a pro Bitcoin, I hate saying crypto, but I guess you have to nowadays, but just having a pro crypto administration, that's not just willfully trying to put, all the companies, a lot of companies we invested in here in the US had the worst 4 years under Biden. It was almost impossible to operate. So just having a pro Bitcoin administration and some Bitcoiners in the White House, Lutnick, all of them are on record as very big Bitcoiners. I mean, it's just a matter of time before it happens. And the fact of the matter is whether you're selling tomatoes or whether you run a food establishment somewhere, okay, there's always some sort of standards, right? You could build a building, okay, there's code, there's a minimum code, and that doesn't mean that that's the best for your house. That means that is the minimum. The minimum is what the code is when they come out with these sort of things. So it's a fine line between government oversight and protecting the people. Do you want to make that person that's making your sandwich wear gloves? It's a law that they have to wear gloves. You can think about it however you want, but the fact of the matter is they really do need to get something done for Aunt Mary and Uncle Bob. I don't think it's gonna. I don't think that you can keep the banks out. I don't think that you can keep them away from Bitcoin. They're already there now. They've got ETFs, and it's just a matter of time. So let's get some sort of clarity on exactly how this is going to work moving forward.
Yeah, no, I think that's what we're all waiting for right now, because we have some people out there with some pretty lofty predictions of where they think Bitcoin's price is going to be in 2026. And our next story is going to talk about just that. So hang 10, guys. I'll be back at the end in just a minute. Because if you spend enough time around crypto markets, you start to notice that most price predictions are designed to sound exciting for about 5 minutes and then quietly disappear when the market moves one way or the other. So when a major asset manager releases a forecast that stretches into the next decade, it's worth slowing down and paying attention to what they are actually saying and why they believe it's realistic. And that is exactly what Bitwise is doing right now with its latest Bitcoin outlook. The firm says Bitcoin could reach new all-time highs in 2026, and it also believes the market may be moving beyond the traditional 4-year boom and bust cycle. That cycle has shaped crypto trading for more than a decade now, but Bitwise argues that growing institutional participation is now changing how the market behaves. Let's take a look.
Yeah, our view this year going into 2026, when Bitcoin was trading around 93,000, when we published our report about 2026, was that Bitcoin would hit new all-time highs this year, and it would break what a lot of market observers have deemed this 4-year cycle that has historically plug crypto. So we believe Bitcoin will be higher. Our long-term view for Bitcoin is more decades out than years out. And we believe Bitcoin will hit 1 million over the next decade, driven by institutional adoption that I just spoke about.
Now that was Ryan Rasmussen, senior research analyst at Bitwise, speaking on Yahoo Finance. Rasmussen says the firm made its 2026 forecast when Bitcoin was trading around $93,000. At the same time, many analysts expected a slowdown after the halving. Bitwise, however, believed Bitcoin would continue moving higher rather than following historical patterns. The firm says its conviction is not based on short-term price movements. It's based on long-term adoption trends. Bitwise measures its outlook in decades, not quarters. It points to the growth of spot Bitcoin ETFs. It points to expanding involvement from traditional asset managers. It points to companies adding Bitcoin to corporate balance sheets. Together, those developments suggest deeper institutional integration. And according to Bitwise, that long-term demand could eventually support a move toward $1 billion Bitcoin. That target would likely unfold over the next decade, and it depends on continued adoption, on regulatory stability, and on broader global economic conditions. Supporters of this view argue that Bitcoin is becoming a permanent part of financial infrastructure. Skeptics counter that crypto remains vulnerable to policy shifts and technological disruption. Both sides agree, however, that institutional participation is reshaping market dynamics. And for those of you at home, this matters because long-term forecasts influence how major investors allocate capital. They affect retirement portfolios, they affect corporate treasury strategies, and they affect how financial institutions plan for the future. Whether Bitwise's timeline proves accurate remains uncertain, but the underlying message is clear. Large firms are no longer debating whether Bitcoin survives, they are debating how large its role in global finance will become. Bringing the guys back. Cedric, when you hear a big firm like Bitwise talking about new highs in 2026 and even $1 million Bitcoin long term, do you take that seriously or does it still sound like classic crypto hype cycles to you? What is your beat on this?
I do take it seriously. Bitwise, I think, has been of the ETF companies, one of the more Bitcoin focused, I think, in terms of ethos, and been around longer in the space to kind of maybe experience a lot of cycles and understanding of how this market works. So I could totally see all-time highs in 2026. I don't believe in the cycles. I think there's been a lot of coincidence with sort of liquidity and other factors in the global economy during Bitcoin's young and early life, and it's not a big sample size. So I would not be surprised at all to see new all-time highs in 2026.
Yeah. And you mentioned that I don't believe in the cycle. Go ahead, Mike, go ahead. Yeah,
well, I don't believe in cycles, but I also think this really plays into prices down. And what has this done? This has shaken out retail. This has kept out retail. This has moved a lot of coins to institutions, to maybe governments. It has centralized a lot of coins into corporations and ETFs. This is a tremendous transfer of long-term wealth from early Bitcoin holders to institutions and corporations. And maybe these are longer term holders. Maybe the first 15 years you had people hold, and now this is the holders for the next 30 years. But it's unfortunate that it's sort of shaking the retail tree out. And all these, maybe it's a coincidence, but a lot of negative narratives around Bitcoin that aren't really changing its fundamentals in terms of economics or scarcity, right? Or what the role it could play in your economic life, but has really soured people towards Bitcoin maybe, or made them more nervous about it. There's a lot of FUD around quantum, around sort of political, geopolitical with the Epstein files. There's a lot of technological FUD around knots versus cores and filters and policy and consensus. So these aren't positive momentum builders for Bitcoin savings in 2025 going to 2026 for the retail mind. But the institutions are scooping up all these coins, maybe even by shaking people out of their levered Bitcoin, or through this volatility of expectations of going higher, going up to maybe new all-time highs in the 120s and then down into the 70s, and shaking out people who borrowed against or borrowed to buy. So we'll see.
Yeah, I mean, in the last year alone, we've seen a lot of new developments and a lot of new FUD that's probably a part of the rationale for why Bitwise says this old 4-year boom and bust cycle might be breaking, very much in part because of institutions. So Mike, my question for you is, from what you're seeing, does the market actually feel more mature to you now, or does it just feel bigger? What is your gauge on it right now?
Well, Bitcoin is still a really small market. I mean, in comparison, in comparison to other things. I mean, silver for the longest time, when I was a big silver guy, was, manipulated in naked shorts, and, Max Kaiser back in 2013, the big campaign was crash JP Morgan, buy silver. That was the thing that they said. And silver was a tiny market then. And Bitcoin is just a puny market now. So you can definitely manipulate it in certain ways. People say manipulate, they think that that's illegal, right? It's actually not. If you're playing poker and you have a lot of chips and you're making loose bets, you're playing within the rules of the game. You're not manipulating the game. You just happen to have a lot of chips. And some of these people are kind of able to do that same thing, and they use the word manipulation. It's not illegal in any way. But what are these people supposed to say? The Bitwise, the ARKs, everyone with ETFs out there, their job is to create excitement. Okay. And when you have these crazy price predictions, which I take very seriously. I think that Bitcoin will make new all-time highs. I think one day it will be $1 million, and I think it will go up forever. We all think that. So you definitely take it for that. But it is their job, just like everything else. You see a commercial on TV and this guy is telling you, this is the greatest thing ever. This is the best thing ever. You have to have it. And at the end, it's like a cup of soup. But like his job is to create that excitement for you. And that's pretty much what they're doing, and they're doing a very good job of it. But what Cedric said, as far as there's a lot of little sticking points right now, the core 30 sort of, the fighting within the community. Does Aunt Mary and Uncle Bob know about Knots versus Core? Does the average person, are they actually doing either way? It's not good juju, right? It's not helping the price. There are a lot of those little negatives right now that are affecting the price. But look, their job is to go on CNBC and talk about how Bitcoin is the greatest thing ever, which we all know it's the greatest thing ever. Okay, that's their job, and I think that those predictions will eventually come true. Certainly not the short term. The Bitcoin's going to be 200,000 by March of this year or whatever. You could throw a dart and maybe get lucky on something like that. But look, it's their job, and they're playing their part, and they're doing a pretty good job. But it's not working. The price isn't going up.
Right. Yeah. Well, we haven't quite seen the same fervor we saw with Bitcoin. I remember during the COVID era, because it was like a perfect combination of Robinhood becoming a thing and then everybody getting TikTok, and all it was crazy price predictions all the time, which certainly seemed to help drum up retail interest. But Cedric, my question for you is, when we hear these big price targets from the guys over at Bitwise or somewhere else, how should retail investors be thinking about them? Should they just be motivation? Are they pure entertainment? Or are they maybe something to actually plan around? How do you digest all the big numbers we see that are thrown out there?
Sure. If I was a retail investor and I didn't know a lot about Bitcoin, but I was hearing these lofty numbers for future Bitcoin all-time highs that are possible, I would start thinking about Bitcoin as an asymmetric bet for my portfolio. And I would start thinking about how it's got maybe a loftier ceiling than some of the other things in my portfolio. So maybe I want to take a 1 to 2 or 10% position, so that something that if it goes to zero, it doesn't really affect my whole portfolio. But if it 10x's or 100x, it could really impact my portfolio. So a large enough bet that 1%, that could be meaningful, but small enough that it wouldn't impact the greater portfolio. And I think that's one way to start looking at it, because I think everyone is trying to figure out where to get alpha in this economy. It's very hard to just sit on whatever cash flows or reserves you do have. Your bank account is not providing any yield. You can get, and so everyone's going further out on the risk curve and trying to find some yield at hopefully the least amount of risk possible. So I think, and so I would think about, also maybe acquiring things that are scarce, and Bitcoin could be that scarce thing you can have an asymmetric bet on in your portfolio. And then longer term, as you build conviction into it, I think that you start thinking about that 1% as more of a savings plan and more of a don't get poor fast rather than a get rich quick kind of scheme.
Yeah, I think that's a really sound plan for investors out there to definitely take into consideration. And Mike, if Bitcoin were to move towards something like that $1 million range over the next decade, what do you think would have to go right economically, politically, and technologically for something like that to happen? I know I've heard, the CEO of Galaxy Digital, Mike Novogratz, has said if Bitcoin's at $1 million anytime soon, the whole world is on fire. Do you share that view at all, or can Bitcoin go to $1 million in the next 10 years, but everything isn't pure chaos? What are your thoughts on that?
I don't think anything needs to happen in the three areas that you outlined. But what I do think needs to happen is people actually need to understand and want to and easily be able to acquire Bitcoin for their own savings technology. And nobody likes to talk about it, and we're all cheerleaders and we're in the bubble, but nobody uses Bitcoin. I mean, really, nobody does it. I had an Uber driver the other day who said, I can't afford a whole one. He didn't understand. He had some unit bias. He said his cousin told him to buy some other crypto thing because he doesn't have, $85,000. He has no idea. You look out to the average person, they have no idea. Nobody has Bitcoin. And, it's the one at a time. It's the guy who does your oil changes or the lady who does your manicures. You get her on River and you just say, hey, just throw $5 a day in. Throw $5 a day, forget about it. You know what I mean? And a couple years later, you're going to be happy that you did, and then maybe the education starts. But there's just such a big hurdle as far as getting people to understand even just how. Where do they go? That's the average person. They Google it and maybe they sign up for Coinbase, and next thing you know, they're buying some other thing that's not even Bitcoin, or whatever they do. Or they have an ETF, at least they get exposure to it, but then they're not really using Bitcoin. They don't really understand it. They know that they have something, like the GLD or one of these other things with gold and something else. So look, I think that that needs to happen. And I don't think that is necessarily going to happen from the world burning down. I don't think that the guy who's, working every day as a postal clerk needs to see the world burn down to go home and be like, I got to buy Bitcoin. I think that it's going to take maybe the price appreciating again, when instead of CNBC, it's CNBTC all day long talking about Bitcoin, and I think that will definitely get some wind in the sails. But the fact of the matter is nobody uses Bitcoin. They don't understand it. And there's just a big hurdle. I mean, we're still early, right? We've been saying it forever, and we'll probably be saying it in 10 years. In 10 years, we'll probably still be saying so early.
Yeah, no, I think you're right, and you make a lot of good points. It's an educational thing, and you mentioned you're a guy when you get an oil change. I literally did that 2 weeks ago. Guy started chatting me up, and next thing I know, I'm explaining him why Bitcoin solves this. So it's very real, and it seems like those grassroots connections are often what really help people along their own journey the most. And you guys are two of the bigger stewards in this space that are helping people on those journeys. So before we end our time today, really quick, first with you, Cedric. You have an amazing Bitcoin podcast of your own. I've been on one of them. You also have the Bitcoin Matrix podcast. Really great places for people to start on their own Bitcoin journey and get a deeper understanding of the space. So where can I send people in our audience if they're interested in learning more about what you're up to with your amazing podcasts?
No, I appreciate that. I always have fun with you, Hank, and it was great to catch up with you again, Buzz. You can check out the Bitcoin Matrix anywhere you view or listen to your favorite podcasts, on YouTube, Rumble, on the X platform, iTunes, Spotify. Same thing with Bitcoin Center. Bitcoin Center is live every Tuesday at 2 p.m. Eastern. It's more of a debate show. Bitcoin Matrix is philosophical conversations and interviews, long-form interviews about Bitcoin and its effects on society, culture, and economics.
Yeah, it's amazing. So I certainly encourage everyone to check it out. Cedric's a blast to go out, so make sure to watch it if you haven't already. And Mike, you're doing amazing things over at Lightning Ventures. For people in our audience that want to learn more about you and what you and the team are up to, what's the place I can send them for that?
Sure. So we have two platforms. We've been pretty quiet lately. We're working on something in our secret lab here that might come out in around May. But LTNG.Ventures, Lightning Ventures, we've invested in 40 or 45 Bitcoin only startups in the space, and we allow for retail to actually participate. So similar to what you said there, as far as how do you invest in SpaceX and these other sort of things, not necessarily secondaries. But we have a platform that allows accredited investors to invest as little as $1,000 into some of these awesome Bitcoin startups, and we just focus on Bitcoin companies there. So that's Lightning Ventures, if you want to check that out. And we, a little over a year ago, launched another platform called Thunder Funder. That's thunderfunder.com. That's a crowdfunding portal, equity crowdfunding here in the US. It's FINRA registered, where anyone, retail, can invest little amounts into Bitcoin and open source companies, which we are also retooling and doing a lot with there. So if you are a Bitcoin founder, if you're a builder, if you're in the space, if you're looking to raise capital, perhaps one of our two platforms can help you put together or help fill out your round. So you should definitely reach out there if you're a builder in the Bitcoin space. And that's pretty much what I'm working on.
Amazing, guys. Well, I got to thank you both. You're doing God's work out there. You're helping push Bitcoin to the next generation of Bitcoiners out there. And thank you so much for your time today and sharing your insights and expertise. It's always a blast, and I hope you guys have a great rest of your week.
Thanks, Hank. It was great to see you. I've backed a few companies for as little as $1,000 through Lightning Ventures. It's a great platform. Right. Definitely check it out.
Love to hear it. Amazing. Well, thank you so much, guys. Pleasure seeing you. Enjoy the rest of your Tuesday, and I hope to see you both soon.
Thanks.
Thanks, Hank. See you soon.
Thanks, guys. All right, we're taking a quick break here at Roxom TV News. But when we're back, we'll be joined by other Roxom TV co-host Walker America to see what's going on at his show. That'll be coming up right after this, so stay tuned. More Roxom TV News coming your way in just a minute. Welcome back to Roxom TV News. We're now joined by fellow Roxom co-host Walker America. Walker, how are you? Happy Tuesday. What do you got cooking on your show today? Everyone wants to know.
Got a lot cooking. Good to see you, Hank. Excited for our shows later this week on Thursday and Friday, which are becoming a regular staple here on Roxom. We've got a couple of good things lined up here today. We've got Kyle Olney, who's going to be joining us for the first hour on my program, a 3-hour total here. But he is the co-founder of SaveOurWallets.org, and he's a senior advisor at BPI. We're going to be talking about the market structure bill, some changes that may or may not be happening, what it means for Bitcoiners and the industry more broadly. Then for the second hour, we're going to have Frank Corva on. He's a fantastic journalist, publishes all over the place and independently as well, talking about the new New York Attorney General candidate who is calling for a scrapping of the BIT license. And if you don't know what the BIT license is in New York, you are going to find out. Frank is the best person to talk to on this. And in the third hour, it'll be me rolling solo. We're going to be talking about some of President Trump's recent comments on the market structure bill, some social media bans, the Clintons and the Epstein files, which I'm sure is going to continue to provide us with absolutely horrifying content for way too long to come, some shutdown deals with the government, and a whole lot more. But it should be a good show.
Yeah, it sounds like you got a jam-packed episode, and I'll be curious to see what you talk about on the Epstein files. I saw some of the releases this morning, and they are abhorrent. So yeah, good luck with that in your 3 hours. Frank's great. We had him on the show last week ourselves, so I know you're going to have a great time, and I'm excited to see you on Thursday, my friend. Have a great show, and all good things till I see you then.
Thanks, Hank. Take care.
See ya. Cheers. And that's a wrap, guys, for here at Roxom TV News. If you haven't already, do the thing. Make sure to like, follow, subscribe to Roxom TV, Roxom TV News, and me at Hank at Roxom TV, wherever you choose to do your doom scrolling. And we will be back tomorrow with our Wednesday edition here at Roxom TV News at our normal time of 8 a.m. PST. So until then, stay tuned. Walker America's up next. You won't want to miss it. And I will see you boys and girls mañana. See you tomorrow, guys.